Okay, guys, this one is very phenomenal interview. Like, I'm very excited for this show host, show guest actually, to start talking. But first, let me introduce you to the person that we're having sitting here in front of us. Her name is Alina Trigub, and I'm not going to read the entire bio because it's quite long, because it's very impressive. So I'm just going to leave it in the show notes for you to read. But she's the founder and a managing partner of SAMO Financial. That's SAMO Financial. It's a boutique private equity firm specializing in helping a select group of people passively invest in commercial real estate. For over 6 years, Alina has been an equity partner in various multifamily private placements nationwide. Alina's business motto has been articulated by Warren Buffett, indicating that someone is sitting in the shade today because someone planted a tree a long time ago. That's a great quote, by the way. Her passion is to teach others how to build wealth. And the bio, as I told you, it continues. So you can read the full version. You can read the full version in the description down below. Again, go and check it out, the SAMO Financial. That's SAMO Financial for more bio and just free content about real estate investing. So again, thank you very much for being on the show, Alina. I really appreciate it.
Thank you for inviting me, Martinas. It's my pleasure to be here.
Thank you. Thank you. So, again, as I told you before the interview, I just love the stories. So I can't wait to actually dig in deep and see what your story is. Again, first of all, like, I want to just bow down and say, like, seeing women in real estate space, it's phenomenal. Again, the things that you accomplished, like, guys, you should go and follow Alina. What she's accomplished in real estate space is unbelievable. And it's just not for the, like, talking about the women, for anybody, but it's kind of a space that a lot of men are in. So I like, if we'd see more women just like you, it will be much better. So going back to the start, can you take us back to the start and, like, where did you start it? Where does your journey in real estate investing started, and how did you end up in the position that you are right now?
Sure. And thank you I'm grateful for compliments and everything, but I want to point out something. Real estate is a team sport, and I wouldn't be able to be here today without all the partners and friends and supporters that I found and met along the way. And I truly believe what Jim Rohn said a long time ago, that you're the compilation of 5 people around you, is very, very true, because ever since I started networking and meeting these wonderful folks within real estate, within the entrepreneurship state in general, I met so many phenomenal people that I was able to learn from and gain the experience from, and just hear and see what they're doing, that it has helped in my personal development and to get me where I'm at today tremendously in general. My journey started probably in my undergrad when I was getting my degree in accounting, which I never really wanted to do, but as an immigrant at that time from former Soviet Union, I thought that I needed to get a degree that will get me a job, which was true. I got a job before I even graduated from college. I worked as a tax accountant in public and private world, never really liked it, and left the field going into software development and taking a completely different role, nothing to do with accounting, but more of a liaison between business and technology. And I liked what I was doing more, and I was enjoying the different roles that I had. What I was lacking is to find a way, because as I was growing, so was growing my income, but I was lacking to find a way that would help me to lower the implications that growing income had on my taxes and the AMT, alternative minimum tax. And obviously, as a former tax accountant, taxes has been on my mind for a while. And I always thought that real estate would be a good way to lower taxes, but I haven't really taken action until about 6 to 7 years ago, when I finally started researching, started looking around, trying to find an investment property in tri-state area where I live, around New Jersey. But given that the prices have always been high here, my search ended up nowhere. I didn't buy anything locally, and I decided to switch to an out-of-state investing strategy. And while I was looking at the out-of-state investing strategy and doing my research, I came across the world of syndications, and the strategy looked pretty interesting. As I dug a little deeper, I thought this was a good way for me to start investing, which I did. I invested in one syndication as an equity partner, then another, and then it was more or less trickle down effect. And after enjoying that experience, for a while, I realized that this is a great way for a lot of people to invest, because number one, it's completely passive. Other than doing that upfront learning, educating yourself, understanding how the process works, and understanding what different commercial real estate classes, how they behave and acting. Everything else is pretty much would come down to reviewing the documents for any deal and deciding whether to invest or not, which was great. And what I also realized that talking to friends and family, most people have never heard of such strategy. And a lot of people want to invest in real estate, but they shy away from it for exactly that reason. They don't want to become active landlords. They don't want to hear from their tenants in the middle of the night about broken roofs, broken toilets. Everyone wants to have their peace of mind. And this strategy was perfect in that sense. It was also great because it was allowing to generate residual income completely passively. And it was also great because it allows to leverage that real estate investment to save on taxes. Granted, you generate passive losses at the beginning, but those passive losses can essentially be netted against passive income. So, that's on a high level, but that tax savings component is not available on Wall Street. In other words, if someone decides to invest in REIT, which is a real estate investment trust, which a lot of people at first confuse syndication with the REIT. REIT is essentially a type of mutual fund that invests in the real estate only. But when you generate income through REIT, it's only that income is taxed at your W-2 tax rate. That's what a lot of people don't realize. Where when you invest through a syndication, your income is essentially taxed at lower rates when it's taxed, when it's not a loss, when it's income. And that's, again, on a high level without going too much into details. So there are multiple benefits of this investing style. And I thought that because so few people heard about this, I think it's a great idea to bring this to the market and share with a lot of folks and help them to generate that wealth passively, just like I've been doing. And out of that, the idea of my company, SAMO Financial, was born with the sole purpose, as Warren Buffett said, to grow the trees, build up the shade so someone else can sit in the shade down the line and enjoy sitting on a bench under the shade.
That is a great story, and guys and girls, you can feel that this person right here, she's been telling this story for a long time now because she's very good at it.
Thank
very
you.
good. It's not the first time she's
Yes,
telling.
I told it many times.
Yeah,
yes.
yeah, which is a great story. It's definitely phenomenal. I'm just thinking I have a couple of questions that I want to ask. First of all, you mentioned some people that came across in your life. So I don't know what those people were and how did they pull you in, saying because there's a lot of different asset classes that probably can, you can do better tax wise, but why in multifamily in particular, why you got attracted to that in the first place?
So I started investing in multifamily for a simple reason, because it was a very familiar type class. I myself lived in an apartment complex while growing up. It was workforce housing. So I knew the class very well. I knew what it is, what kind of people would live in an apartment complex. Granted, it depends, it differs from state to state, but essentially I understood what workforce housing meant and what the expectations would be. And that's why it was a lot easier to do the homework and due diligence of something that's more familiar to you. And that's why it was natural for me, as well as for many other folks, to start out with multifamily first.
Got it. And that's a good case again. And probably that's why a lot of people invest in the houses, because they live in a house.
Exactly.
Move out the house,
exactly.
move out the house, go and live in an apartment building. Maybe you'll start investing in multifamily as well. So it's great. I love it. So what about passive investing? Because you said, first when you started, you invested passively in the deals. And prior to the starting this recording, I remember I told you the name of the guy who I had on the show, and he's been investing passively, probably 14 deals plus.
Mm-hmm.
And that's all he does. He's not active in any deals, because now the people who are watching this interview thinking like, I want to be investor. I want to invest in real estate thing. It's a sexy thing. Everybody's going. I need to go as well. So maybe you can explain people why passive investing is actually a good thing as well.
Sure. So imagine, especially on the East Coast, where I'm, where I'm from, life is very busy. People are always rushing, whether it's personal life, business, hobbies, children, if they're at that age that they have kids, and it's really hard to find the time for something else. However, while you have a busy life, you should also take control of building your wealth, because if when you're young, you may be capable of working and doing everything, but you may also want to enjoy your life, and maybe you want to be part of FIRE at some point, financial dependent, retire early, or maybe you just want to work and then enjoy your life when you turn 40 or 50 or 60, whatever it is. But in order to get to that point, you need to start building your wealth early. And obviously you can do it through Wall Street investments, but as we all know, market is very dependent on a lot of factors, and it's virtually impossible to predict what's going to happen when, unless we're just following what the 2 and 10% treasury bonds are doing. And again, it's not an exact science. It's a lot harder to predict what's going on with the stock market versus what's going to happen with your real estate investment. That is hyper local. That is, for instance, in Chattanooga, Tennessee. If you have an apartment complex in Chattanooga, Tennessee, if you know the market well, if you know the area well, you bought the property and you are managing it, you will have an idea as to what to expect from vacancy perspective, from property management perspective, from obtaining services of other professionals. Whether it's landscaping or snow plowing and so forth. You cannot say the same thing about Wall Street. A lot of things are very, very unpredictable. So what I always tell folks that, while it's good to have investments in Wall Street through your 401k, your IRAs, you would also want to have some sort of diversification. And real estate happens to be one of those alternatives that is a good option as an alternative investment. And while I'm not giving advice to anyone, but what I did, and I'm talking more about personal example, I was looking for a way to diversify. In addition to having stocks, bonds, mutual fund, I wanted to have something else to balance out the portfolio. And again, it could be things outside of real estate. The alternative investment list is pretty long. Real estate just happens to be one of them, and it's one that fit my interests and my long-term goals. But other people can definitely look up and find other alternatives. Sure.
Yeah, but it makes total sense. Like for me, and I think for the people who are watching, if you're a person who has common sense, because it's a common sense, like if you go and buy an apartment building, you're buying an existing business that you're looking to improve and increase the NOI and whatever the exit strategy you might have after. But when you go and buy a stock, you don't buy a business. You buy somebody else's business that is not your business, first of all, to buy the stock. because I
Right.
mean, you cannot control it. And everything in my life that I have going on around me, I don't know how you guys feel. Maybe you can leave a comment saying, do you like to be kind of controlled when somebody, you know, like has the strings on you and they control of what actions, what you do in life, or you like to get in control? Because like stock market won't let you do that. Like you will never get in control of that. But you know, coming back to the properties, I would love to just expand on that a little bit more, because you mentioned that you have some deals. I don't know if you have in Chattanooga, Tennessee. So maybe you can explain, or that's just an example that you gave
It
me.
was just an example. Yeah,
Got
it's a good market. But Martinez, I want to expand, if you don't mind, on something
it.
you mentioned in terms of having control. So when it comes to syndications, there are two sides. There is general partnership side, people that
Yep.
are doing all of the work, and then there are limited partners, passive investors or equity partners that are only putting their equity or their funds into the investment. So these
You have no
folks
control. Yep.
have no liabilities, but they also have no control. They have no say in a partnership. They only are privy to the updates that general partners provide. And
Yep.
even though they're not privy to make a decision, they're privy to all of the updates. They know what's going on with the property. And when it comes to buying the property, when it's purchased, during that process, general partners typically put together a package where they explain how they strategize, what are they planning to do with the property, and what their expectations are for X many years ahead.
Exactly.
And while while it's not an exact science, the main difference between Wall Street versus syndications, Wall Street, essentially you throw in a dart in the dark. Okay, this stock looks good, I'll buy it. Here, when you're purchasing apartment complex, it's also risk. Don't take me wrong. It's not FDIC insured. Everything is risky and there are tons of risk involved, but it's a calculated risk, because
Yeah.
essentially what you do, you take the financials that exist today from the current owner, and based on today's financials and based what you know about the market, vacancy, economic vacancy, expense ratio, how it's going to grow. Based on that, you project into the future your expectations. So that's why I'm saying it's risk, but it's a calculated risk. This is what you think is going to happen. Obviously, you cannot control natural disasters or if thefts or vandalism is going to happen. But outside, and for that you buy the insurance. Outside of that, you are able to project what's going to happen with your property. And it doesn't have even to be an apartment complex. It could be a single family house or a duplex. So with for all that matter, you can predict into the future what your expectations are with any real estate property.
Yeah, yeah. And you're going to hear those predictions from sophisticated investors who's been in the market for a long time. So that's what I'm talking about, the prediction. And I thank you for clarifying LPs and GPs and the difference between those two. But there's still more control. And what I mean by that, because if you have sophisticated investors just like yourself who've been in business for a long time, you can already predict and control what's going to happen with the deal. You already know if you're going to invest 50K or 100K. You kind of know what you're going to get, because these guys and girls, and they've been doing this business like tens of decades now. And everybody's like, they never had the deal go bad. Maybe, there was kind of, maybe the returns wasn't that good as expected, but it's still better than it's a stock market. So, and like, if you put the same money now in the stock market, particularly now, what's going on in the stock market, I don't know if you're going to come out like earning anything. So that's what I'm saying. That's why I think it's a good deal, multifamily. So coming back to the deals that you're currently investing in, I would love for you to kind of like spill out, what do you have currently like in your pipeline, or maybe the deals that you currently have, controlling assets that you have, like in what states? Because I think it's important for people to understand why you're choosing these states and how big are the properties and what you're planning to do with them, and when it comes to the exit strategy.
Sure. So, and while I can't talk about the current deals because of the guidelines, that's not allowed, but I can give you a general overview. Typically, the way we approach this is based on a specific commercial asset class, and the state of the market for that particular area. So, for instance, again, let's take multifamily. We look where the population is growing, where the jobs are going, and where the major employers are staying. And the markets we like a lot are Texas. I mean, I like Tennessee in general, but I don't have anything in Tennessee. We like Florida also as a great market. And Florida is actually also good for storages. And we have a storage in Florida. And the reason for that is because, again, the area has a lot of condos, and typically people with condos don't have a lot of space, so they're looking for extra space to put their belongings. And not only that, because of the warmer climate, some of the units in that area built as climate control to allow to store their belongings under the temperature where nothing's going to happen to them. So you also have to account the area and the weather conditions of the area where you're buying a specific commercial asset class and where you're renovating it. And whether it's multifamily or storage or something else, the supplies that you're buying to renovate the units have to also reflect the area, whether it's a hotter climate or colder climate. You want to buy the supplies that will be reflective of the climate and will be able to last for a long time. That makes sense.
Yeah, there's a lot of variables, I mean, in this industry, and probably some of you guys and girls are watching Alina and thinking like, man, I want to be the same. I want to be the same. I want to talk the same. And I mean, you have a lot of knowledge and people can sense that. I mean, I'm just blessed to be in a presence currently and just have you on the show, but can you just explain, coming back to your journey part, like where did you collect it? Because I know it's doing the deals, doing the talk, like walking and just taking a lot of action. But what was that transition for you, going from accountant to actually pursuing the dream of becoming a real estate investor? What was that journey in the time frame?
Sure. Accountant was a long time ago. I left the field, gosh, I think it's been about 20 years since I left the accounting field.
Right.
I've been in software development. But in general, it started with reading a lot. And when I say reading, it wasn't just reading books about commercial real estate. It was also books on personal development, because as you're reading these books, you need to make sure that you open up your mind to opportunities. It's not always a matter of looking straight ahead. Sometimes you need to look around you and see what else is available, and you need to have an open mind when you're approaching, like you said, real estate investment is a business, and it is a business. So having open mind helps a lot, because that helps you to develop specific plan for your business by having the right mindset and by putting together the right goals for yourself. But again, in order to achieve these goals, you have to put your mind to it, and you need to have a really strong why. And what I mean by that is, why are you starting this business? Why are you doing what you're doing? Because if you don't have a strong why, it will be virtually impossible to achieve what you want to achieve. And the road is not easy. There are tons of obstacles on the way, and it's very, very difficult. And you need to be able to get up, find a way to go around the obstacle, and basically dust off and go and continue going despite all the challenges on the way. But in order to do that, again, you need to have a very strong why, a very strong reason as to why are you doing what you're doing? What are you trying to achieve? And what do you see, and where do you see yourself and your partner or your family down the line? And that down the line, maybe 3, 5, maybe 10 or 15 years down the road. But you have to stay consistent, keep moving. And as far as the plan, you have to keep adjusting the plan, or as one person said, pivoting. So you're working towards your plan, and if you see that the plan needs adjustment, or you need to take the right turn or the left turn, you just pivot and take the turn and continue moving and continue adjusting your plan. Does that answer your question?
That is a good golden nugget right here. So thank you for sharing that. And I love the way you approach things. You just, I said going from accountant to the real estate, it was like, no, I finished that long ago, and this is when I said, you know, passive investing, you have the control. No, there's LPs and GPs. You always, you know, like giving more and educating. I just love the approach. I just want to say that, you know.
Thank you.
So,
Yeah, the former accountant is speaking up in me for sure. I like the facts.
yeah. I see that. That's great. So coming back to, you know, personal development and what you said, just getting more clarity of and finding the why, what you want to accomplish in the business. It's very strong. It's the basis of anything. You know, if you're, you know, a business owner, you need a strong why. If you don't have a business, you need a strong why you want to go and pursue this job or do whatever you want in life. So there's those people called mentors as well. So I would like to, for you maybe to speak on a little bit about that, because there is a lot of mentorships now available. Everybody's kind of, you know, take my 6-figure course, 5-figure. There's different, you know, numbers that we can put out there, you know, different available courses. Would you recommend for people to go and explore this option when they're looking to get started in the business? That's for the active people.
So what I typically tell people is it's something they need to explore and decide what they want to do. And by the way, there are different types of offerings available. Some are offering mentorship, where it's complete hand-holding and taking them through the course that people are offering. But then there are also coaches, people, and if you think of coach, it's someone who is available to you as a resource where you can ask questions and they will provide guidance, but they're not going to be doing the hand-holding. They're just going to challenge you, or they may help you open up your mind to another opportunity, or like I said, help you with that personal development, but it's not the person who is going to, let's say, take you through the underwriting or take you through the specific steps of due diligence. So there's coaching, there is mentorship, there are books, podcasts, networking events. So there are tons of different educational resources available, and it's a matter of personal preference and personal financial situation as to what the person wants to achieve and how fast they want to achieve it. When they hire a mentor, obviously it shortens the duration of how long it takes them to get from destination A to destination B. It doesn't mean they won't get there without the mentor. They can absolutely get there without paying $30,000, and that 30,000 may go into the mistake they'll make, or maybe they will not make that mistake, or maybe it'll cost them 1,000 or 5,000. Nobody knows. But essentially, people that hire mentors do that because they want to shorten that duration, and they want to have that backup that if they don't know what they're doing with their investment, that they have someone watching their back and making sure that whatever step they take in is the right step. Now, there are obviously alternatives that you can try to partner with experience, but again, you have to bring something significant of significant value to the table in order for that experienced partner to agree to partner up with you. It's challenging, it's hard to do, but it's possible. So there are ways to avoid that. You can hire a coach if you want someone to will hold you accountable and will keep pushing you, but the coach is not who is going to be educating you, if you will. So that's the difference. So there are essentially tons of different options, and each individual needs to decide what works best for them.
Yeah, what they want, definitely, for sure. And again, love for clarifying the differences on that. And I mean, there's definitely, you know, different level courses available, but what you said, it's so true. People just have to decide of what they want. Again, for the people who are watching and thinking like, I would love to get a mentor, but paying somebody 6 figures is kind of a not like, it's the position that I'm not in right now. Mm-hmm. But, you know, there's again, different resources that you just mentioned, just like podcasts and books. So mm-hmm. From your personal experience, maybe you can recommend people like 3 personal business, real estate development, anything, you know, type in that space, 3 books that people should definitely read.
I personally like both of David Lindahl books. One is called Multifamily Millions. The other one, I think the title has Emerging Markets in it. But if you just search for David Lindahl, both books will come up. I think they provide great foundation. Obviously, they're not the only ones. There are tons of other books Jason Biggs. Oh my God. I actually have a whole book library. If anyone is interested, I can send you the link if you want to leave it in the show notes.
Yes, please.
People
Yeah.
are welcome to go to that library and buy the books. And by the way, the proceeds from, I get Amazon affiliate links. So the proceeds from those purchases, whatever small amount I get, go directly to the charity benefiting the children. So
Beautiful.
there's a
Beautiful.
value in that as well. But in addition to books, I think listening to podcasts is beneficial, as well as going to networking events, meeting people in person, asking questions, hearing their stories, hearing their presentations. And as you network, as you continue going to the same real estate club, and people start recognizing your face, it will help you to, number one, build credibility, and number two, potentially find partners or find investors, or maybe find that future mentor or coach at the next event. So I think that's also beneficial, doing the combination of those. And those typically are very inexpensive and easy to go if you just look for real estate meetups.
Sure. Yeah, definitely. And the coaches and the mentors, there's probably, you've seen a lot of cases where people actually just exchange value. They provide something. So let's say somebody, like if you're looking for something in particular in your business right now, and people would know that, and they have the skill set that you need, and they will fill in that with their skill set, and they will ask it like, would you be available to give me an advice like from time to time? And you probably would say yes. And like this is a good approach now, but you have to have some really valuable skill set to provide these people, because again, these people are very busy, like most of them. And yeah, you just have to figure what that is.
Yeah,
So,
no, absolutely. And again, mentors are those that provide full service, full education, and go through that whole process. Coaches, on the other hand, is someone who will help you with personal development, help you see the opportunities, and hold you accountable. And like, in my case, I do virtual masterminds for people as a coach. So I bring the folks together and I help all of them kind of continue moving forward with their goals. And everyone in the room may have different goals. We have people that are currently flipping. We have people that are investing actively or passively. It doesn't matter. What matters is everyone has their specific goals and their specific challenges, and you share it in a group setting, in a safe group setting, and we help to keep each other accountable, and we help to keep moving each of the member forward.
Yeah, it's a big family. I mean,
yeah, absolutely. You got it.
Yeah, you're holding, but you need holding hands, because we talked about coaches. It's good when somebody tells me something, but I need somebody to hold my hand sometimes, because that's the connection that I want to have. And that's more impactful than just saying, oh, go do this and go do that. You still need that, but you need both.
Absolutely. Completely agree, Martinez.
Yeah. So what about, your personal goals? Because you mentioned, building goals, and again, for the people, helping them to cherish, and blossom in their business. What about your personal goals? Because again, accomplished all these tremendous things currently right now. So maybe you can share a few, business goals that you're planning to accomplish this year for your business as well.
My goals are constantly changing. I'm actually in the process of revamping them, but essentially, what I do is I look at where I'm at today and where I want to be, let's say 12 months from now. And what I do is I try to break it down into small iterations, maybe 6 months iteration. And then I take the 6-month iteration that's currently going on and break it down even further, let's say into 2-month iteration. And within those 2-month iteration, then I look, okay, this is where I want to be in 2-month time frame. How am I going to get there? For instance, I know that I need to be consistent with social media and start posting every single day. I haven't done it, and I'm talking about LinkedIn, I'm sorry. In my case, it's LinkedIn. For other people, maybe it's TikTok or Insta or whatever else they use. But I'm working on my plan as to what I'm gonna post and how I'm gonna stick to that plan of posting on LinkedIn every single day. And that's one of my goals that I'd like to get to within the next 2 months, starting posting content on a daily basis. And I give you a lot of credit for doing your show on a daily basis. That's a ton of work, and not everyone would
Yeah, yeah,
sign up for this kind
well,
of challenge.
it's coming back to the family and the team. I mean, it's not only me who does that, and cutting part and all of those things. So I mean, like if you're running a business, like it's coming, like you need people, and
Hmm.
yourself having like being very active in multifamily syndication. Like it's not even that. Like every business should have people. So
Yeah.
like that's how you accomplish things. But
Yep.
sometimes I have to be alone, just like right now. But like this is a good time,
Yeah.
So this is awesome. So maybe you can expand a little bit more on the social media part, because I see like there's a lot of people, again, real estate space is very old. Like you see this floats, like quotes floating around, landlords grow rich in their sleep or something like that, right? So it's been
Yes.
like it's been a lot of it's centuries and 100 years before people became wealthy in real estate, when they bought cents on a dollar. Like they bought land like for pennies, and they became wealthy. So but now everybody has this perspective, I'm just going to do the business the old school way, which is shaking hands, meeting people face to face. And now you're talking about the social media approach. So what is your personal opinion? Should people and companies just like yours, should they focus on social media and just get more people attention? And do you think would that be beneficial for the companies in the future and now as well?
Yeah, and social media is important if you're looking to build your thought leadership platform, because you have to build up a name that is associated with the brand, and that brand could be your name, doesn't have to be a company name,
Mhm.
that's recognizable. And when I say recognizable, it doesn't mean that all the billions of people have to recognize it, but the community that you build around that brand has to recognize it. So it's really up to you how big or how small of a community you want to build, and what kind of name you want to put with the face and for people to recognize. But essentially, when that name shows up in the news, or when that name walks into the door or presents at the conference, the audience that you build up is going to be the one cheering and supporting for you. And if you don't have that audience, you essentially haven't built that support that you will need when you're doing one of those things. And so it's really important to build that, and to build that brand that people not only recognize but also trust, because
Yeah.
people work with other people, but they work with other people that they trust. Until you establish and build that trust, no one's gonna want to work with you. So you need to build that trust first, and then people would want to work with you.
Yeah, yeah. And I know that you love the Warren Buffett quote, the one
I
that you
do.
said. He has a similar quote saying about the trust, like it takes years to build the trust, but it
Yeah.
takes minutes to break it. And
Yeah,
so
exactly.
yeah, exactly, that's the thing. So,
Excellent.
yeah, so you people need to build the trust, and that's like playing the long game, because like there's a lot of people, and you probably know, like I'm not going to be picking on people, but like real estate is a like it's a marathon, it's not a sprint, right? You want to position yourself for a long game, and you want to like do stuff now with, like, particularly with social media. Like I think it's a must. I think it's definitely a must, because if you just position for yourself right now, I mean, it's not only you, like everybody's who's watching and they're active, because like in a downturn, I think it will work very greatly for them, because people would be very, like, the scarcity will be there, I think, right? People will be like,
Absolutely.
should I spend the money? Like, I'm a business owner, but should I invest it? Maybe it will be a third, a fourth, a fifth thought in my head. The first thing will be, how do I save it? And second will be, maybe first one, how do I protect it? And second one, how do I expand my business in this time? So it probably won't be investing. So if you just, as a company, if people produce more on social media level, because when people are going to sit at home and turn on TV, they're not going to watch TV. I'll promise you that. They're going to
Of
switch
course.
on the phone, and they're going to do this. They're going to scroll on Facebook, Instagram, Twitter. And if those companies are being seen on those platforms, if people still don't have the money, they will find it, which in the cases, if you're a business owner, you have the money. And if you want something bad enough, you will spend the money. And that's why I think, people should be, and companies on social media, particularly now, because, like, I don't know, we're probably not going to go into the details. How long is the winter going to be? But people, economists saying it's going to be a long one. So, just positioning from that standpoint, I think it will, provide a lot of value for the companies as well.
Agreed.
So before we wander off, it's been a phenomenal time, having you on today. I mean, I learned, like, I like you. Like, I had so many prior guests prior to this conversation. I bragged to everybody. I said, I will have Alina on. And everybody said, she's very sharp. She said, she's very sharp. So I was kind of nervous. I was like, oh, I know she's going to be fixing my, grammar and all of that, which you did. Like, you just clarifying it, the things that I said wrong. And I just love it. You're just a great teacher, providing a lot of value to people, again, building this family, building your presence in the market, like with the things that you're accomplished so far. It's phenomenal. It's amazing. We still didn't touch the business goals that you're planning to accomplish this year, but I'm sure they're pretty big. So for the people, if they're looking to get in contact with you for, again, real estate questions or passive investing, what will be those social media platforms for them to get in contact with you?
Sure. They can find me on my company's site, samofinancial.com, or through social media, which is LinkedIn, Facebook, or Instagram.
Awesome. And as always, guys, all the links you're going to find down below. So click one of the links. And again, the book list, don't forget to click the book list to check it out, all the books, grab some books, help some people at the same time as well. And, it's been a tremendous time. I really enjoyed it. So guys, if you feel exactly the same as I do, click the like, subscribe to the channel. And as always, I'm going to see you on the next episode. Thanks.
Thank you.